Today, I want to talk to you about Revolut's newest feature, which is their Robo-Advisor, which is supposed to make your investment journey so much easier. Now, for a bit of context, I'm a huge Revolut fan. I've been using the app for many years now, used it as I lived in many different countries. It really helped me dealing with so many different currencies, getting currency exchange free of charge basically, and so many amazing features that it has. I'm also on the Revolut Ultra plan. I really love it and use it as a daily banking app of my needs basically. I also did start my investment journey with Revolut in a way, which was one of the first apps that I used to start buying stocks and shares. However, as I got more educated in the space, I actually didn't find it the best option for my needs. And these days, I actually don't really recommend using Revolut for investments. However, as I said, they did come out with a new feature, which is the Robo-Advisor. And a lot of you have been asking me to make a review on it. So in this video, I really want to give you my unbiased view of the feature and show you whether it makes sense for you or not. Ultimately, it's your decision, of course. Again, nothing in this video is investing advice. I'm just sharing my own journey and my own opinion. So without further ado, let's grab ourselves a coffee. I actually made this like a powdered coffee, first time since I don't have Nespresso over here in the Airbnb where we're staying, but you know, it does the job. Right, so basically what you want to do is download your Revolut app, sign up to it, and then once you're up and running, you open your app, and you will see already at the bottom, since they upgraded to Revolut 10 in recent times, that's one of the main features which they're pushing, because obviously investing is quite profitable for those companies, so they want their users to also start investing through the app, which I understand from their point of view, but again, we'll see if it makes sense for you. So what you want to do is click on Invest over here, and that will take you to the investment screen. So you can see, obviously, I don't have any capital in it. I use many different brokers, mostly interactive brokers, Lightyear, Trade Republic, and Trading 212. I used to use Revolut for it, but one of the big features why I didn't like it in the past, they did have a monthly portfolio fee on it, which I really didn't like. So basically, they charge you if you did trades or not, which recently they changed and removed it. That's very good. That's a smart move by them. But still a big issue is that you can't transfer your portfolio to another broker. And for me, that's a real no-go. So if you, for example, build up a big portfolio, let's say you have 50K over here, and one day you never know what happens. Either the company is going down or things happen, right? It's a dynamic world. You never know what's going to happen 5 years from now. And you want to move your shares to another broker. Well, you're in bad luck with Revolut because they don't allow you that. So you actually used to be able to do it, but recently, sadly, they changed it. Some of the company structures was changed around a little bit, and now, unfortunately, you can't do that anymore. And for me, that's a real red flag. Now, also a quick reminder of the trading fees overall. When you go to Revolut, you can see right here, depending on which plan you're in, you have different available trades. So on the standard plan, you have 1 free trade a month. So if you buy 1 ETF, for example, that will work for you. On the Plus plan, 3 trades, Premium plan, 5 trades, and Metal and Ultra. I'm on the Ultra plan, you get 10 trades free of charge. And then any trade on top of it will be at the certain respective cost and fees over here, which again, seems reasonable. I understand not everybody does offer commission-free trading, but yeah, that even on the Ultra plan, which is 45 euros a month I'm paying, I only get 10 free trades. Honestly, in some months I'm actually above that. So I would pay fees on that, even though I pay already subscription to the platform. So again, something I'm not really in love with. Right, so from here, you can go down. Obviously, you can have your watch list, various corporate events. Overall, I like the app. I love Revolut in general. So also for the investment, it's very straightforward, how we search stocks and so on. I really love it, but that's not the video about that in general. It's more about the Robo Invest features. So once you scroll down, you can see automated portfolios. So you can click on that, use a Robo Investor to invest custom portfolio tailored to you. Sounds really exciting. So let's try it out. Let's click onto this. Well, sadly, somehow when I try to screen share, Revolut actually doesn't allow me. It blocks the screen, which is really weird. But anyhow, so I'm trying to do some screen shares as I go along so you understand what it is. So the first screen is basically where they ask you kind of your overall portfolio goal, what you want to do. You build up wealth, protect from inflation, savings for unseen circumstances like your emergency fund, or savings for major purchases or retirement. So in a way, I like the approach, and obviously it makes sense to ask these questions to kind of guide you through the process. So that's pretty clear. So in my case, and I guess most of you watching, let's say general buildup of wealth. So let's click on this, and then it will ask you for your investment horizon, kind of how long are you planning to invest for? And that's also a valid question, right? Is it up to 2 years, 2 to 5 years, 5 to 10, or more than 10 years? Once again, depends on your life circumstances, but I guess for most of you watching, you're still probably rather early on in your career, in your life. So I guess for most of you, it will be over 10 years. So for my case as well. So let's select that. Then obviously a bit of KYC where they ask you your relevant experience, how experienced you are, which probably makes sense. You have relevant educational background, past experience in the sector, prior investing trading experience, or none of the above. So that might depend on you. Obviously, in my case, I select prior investing and trading experience. Then ask you how many years of experience do you have? Once again, select what fits most for you. In my case, actively trading stocks and ETFs. It's 1 to 5 years definitely. If I consider real estate as well, then actually more than 10 years because it started quite early on. But in my case, let's select 1 to 5 years over here. And trading experience, how much have you invested over the last 12 months? also valid question to ask to kind of gauge, how much you're planning to invest. So in my case, as on average, I invest 2,000 euros a month. So that would be over 10,000 euros, obviously. Monthly expenses, not sure why they ask you that. Obviously, once again, to gauge, if you want to invest a certain amount and you spend the same amount, it does work. So interesting question why they ask it. So in my case, the last few months with all my moving to Dubai and so on, it was definitely over 5,000 euros, but hopefully in the future, I managed to get slightly below the 5K mark. So let's select that. And then it asks you for your total liabilities. So total liability is basically how much debt do you have, right? To owe to the bank, mortgage, any outstandings basically. And that, you have to answer for yourself. As I have a mortgage with my wife on our new apartment, technically it's over 100K because that's the mortgage we took. So let's select that. And then we come to the risk assessment. And I think that's a really valid question where they ask you, what would you do if you saw your investments declining by 20% over a period of 1 month? And that's a valid question because that determines your investment decisions, right? Some people are more risk adverse and they get really scared of risk. And then if something goes down, immediately they panic, they sell, and then you wouldn't want to have more risky investment classes. However, some other people, like myself included, when my Bitcoin dropped by almost 50%, yes, I wasn't happy about it, but at the same time, I didn't panic. So, it really depends on your own situation and characteristics, I suppose. But yeah, in my case, I would say I'd hold on or start buying more. That's actually a good question. If it dropped by 20%, I'm not sure if I would really buy more because I would have some question marks. I would definitely hold on. So let's click on I'll hold on to my investments. And then lastly, the risk tolerance. And then one more time about the topic of risk. So I like that because risk is one of the biggest factors in determining your investment strategy. Are you low risk, medium risk, or high risk? Obviously, it comes with high risk, high reward, but also it can go both ways, right? So there's no guarantee for anything in investment. So it asks you that. I would overall consider myself medium risk. I really wouldn't say high risk because I don't invest in many of the tech growth stocks, right? Nvidia and so on, where I might miss out a little bit. But for me, it's just a little bit too unpredictable. And again, some of those altcoins that might pump like crazy in the future, I'm going with Bitcoin, which kind of the conservative crypto, right? So in my way, I would really say medium. I'm definitely more risky than some people who only invest into bonds or S&P 500. So I would say really medium, but once again, depends on your case. And then it basically suggests you which portfolio type you are. In my case, it comes up with a core portfolio type. There are obviously different ones. I'll show you in a second. And there's a new feature which we'll work on in the future. It's the sustainable investing. If you like that, you're ESG conscious and you want to invest into companies doing great things and ethical, moral, and so on, that's going to be a feature here as well, which I think a lot of people really will appreciate. For me, not so much. I really value more the investment returns. As long as I invest into things that are legal, I'm perfectly happy with it. But anyhow, in my case, let's click on core. Okay, so they just called core basically my investment portfolio. Now they suggested me the balanced bundle. So that's my recommended investment portfolio. You can see here the risk factor 3 out of 5. So it seems to be medium risk as I selected. The overall simulated past performance over the past 5 years is 61%. Now, sounds pretty good, right? But that's over 5 years. But still, pretty promising, obviously, when you see, even though I always say past performance isn't a guarantee for future returns, but something to keep in mind. And you can scroll down and they give you some of the risk metrics over here, which is quite nice. The average annual return, 10.3%. So that's actually higher than the S&P 500, which traditionally over the last 30 years, so that's a longer time horizon, was anywhere from 8 to 10%. But 10% definitely beat that. But again, that's only 5%, right? That was during quite interesting times. We had 2020, 21, 22. So quite unusual times, I would say, but still overall very nice returns. Definitely, I would have to say that. But at the same time, you can see here also the maximum drawdown of 21.6%. So it can happen that within a few months, your stock portfolio drops by 21%. Can you stomach that? Will you still hold on to that? While there's upside, there will always be a downside. No stock or investment only goes up. That's something to always keep in mind. And from here, you can go into the portfolio allocation and you can actually see what your portfolio is going to be comprised of, right? It's 50% stocks, 48% bonds, and 2% cash. So in the savings account, some bonds, because bonds are less risky, they're more solid. These are usually debt from a government, right? You get your money back, and in the process, you're going to get some interest from that bond. And of course, stocks to get the higher return. So, despite such a high amount of bonds, even though bonds have been doing quite well in recent times, we know that. So that's probably one of the factors why the returns are so high. But yeah, overall, quite interesting. And from here, you can also click into each of them, what it means in terms of bonds, what you would be buying. In terms of cash, for example, I would be keeping some money in euros. Well, they would do that on my behalf, basically. So even for each of the stocks, I could click into them and get some more insights into what I'm buying over there. So basically, you would be buying different individual ETFs. You can see the fund exposure because some of them are based in the US, some of them are global funds. So that's really something interesting to consider. And yeah, basically no individual stocks, only ETFs in this case. Now from here, if you're happy with this, you can go ahead and click on select balance bundle, and it will show you projections, which in a way I like. You can see your starting amount, your monthly contribution, and get an idea of how much that portfolio would come to in the future. But obviously that will take into consideration past performance. And for me, that's so unreliable, because obviously I understand for the S&P 500, which has a 30-40 year track record, this particular fund and composition of stocks may not perform the same, right? It's nice to see, but at the same time, I think it's a little bit misleading because it gets people too excited. At the same time, they also say projections include a fee of 0.75% per year. Now, obviously, that's the fee that Revolut takes in order to manage those investments on your behalf. Now, you might think, Guy, 0.75% doesn't sound so bad, right? It sounds quite reasonable, actually, when you think about it. But when you actually look at it, it really can make a huge difference. For example, you have a calculator over here. It has a term of 20 years. Let's say invested amount is $20,000 initially, with an annual return of 8% from the S&P 500, let's say. And on the one hand side, we have the fee of 0.75% from Revolut. On the other hand, you would have the fee of a European Vanguard S&P 500 ETF of 0.07%. It doesn't sound significantly more, but if you click on calculate over here and then see the numbers. So on the one hand side, you would have the returns over here. Obviously, you would have more with the lower fees. But when you click into fees paid over here, with the 0.075% fee, you would pay $12,000 in fees. And with the Vanguard fee of 0.07%, only 1,200. So a difference of almost 11,000 euros. So yeah, those fees really make a huge difference and eat into your profitability and return. So that's a big red flag for me. Once again, it's just way too high for what they do. It's a one-off selection where they help you with, but then they basically just buy ETFs. It's not even that they buy individual stocks for you to optimize returns. They're just buying different ETFs. You can do that yourselves, right? If I go back into my available portfolios, you can see at the top, I could select different ones also that are suggested to me. So I could have, let's say, slow and steady. So you can see the returns are a little bit less. Also the risk are less. And overall, when I see the portfolio allocation, obviously now the majority is in bonds. So bonds are less risky than stocks. Stocks are a little bit less. And cash is the same component. But in the end, they're still going to charge me 0.75% fees for that. And I could go into defensive. So the returns here over the last 5 years are 15%, which is actually really quite poor, to be honest. Nobody should be investing into that. I would be making more from interest if I kept my money on the Revolut app, actually. So that's really not a good performance, to be honest. And you can see the portfolio allocation is 98% bonds. Still, they're going to charge me 0.75% fees for that. So yeah, for me, it just doesn't make sense. It seems way, way too expensive. Now, I've just gone back and did the questionnaire again, answering completely different questions and kind of shown that I'm a really aggressive risk taker and I'm really happy with risk. I want to have as high of rewards as possible. And now in the end, I got one more investment portfolio opportunity offered to me, which is the Bold Stack. So that shows you 77% return over the last 5 years, which is obviously higher than the balance bundle of 61%. So basically that's one more additional investment class that I can have. The rest are basically all the same. I can go down the scale and have the same that I've previously shown you. So there's no real addition. Only the highest risk would be Bold Stack, 4 out of 5. I didn't find anything more than that. Maybe there is, but in my case, I tried a few different options. In the end, I come up with those 4 different scenarios. And you can see in the Bold Stack, now my portfolio allocation is 70% stocks and only 28% bonds and still 2% in cash. So yeah, that's set by default. But still, even if I go into stocks, they're all still going to be ETFs. And some of the ETFs I've seen, they're quite overlapping. And many of the ETFs, they still have a big US exposure. And in the end, you're still going to pay 75% fees on top of that. I mean, for me, it just doesn't really make sense. You could, for example, go with Trading 212, which is one of my favorite stockbrokers, and go in there and create a pie. They call it pie. So that's basically your own ETF that you can create where you automatically invest every week, every month as you wish. And you could either follow other people's pies, investment portfolio that's set up already. So choose from a ready-made pie. I understand. Okay. And you can see different pies, community pies, model pies. So you can see how risk adverse you are and so on. So basically it does the same for you, which is interesting. Or you can create your own pie, for example. And what you could do is basically go into Revolut and look at all these tickers that are there already set up for you and add instruments. So you can see exactly the tickers that I've shown you, right? The different ETFs. If you wanted to copy the Revolut one, just add them over here. I could add the Vanguard S&P 500 over here, add it to the pie and say how much I want to have there. Add any other instruments. Let's say I also wanted to have some NVIDIA in there individually, add to the pie. Okay, go ahead. Select what I want to do, how much the weighting is. I want the weighting to be mostly with S&P 500. I could add any other instruments over there. I could see the average annual return based on historic performance. Click on next, auto invest or manually. Let's click auto invest. And then you're going to select how many years. Once again, it does it similar to Revolut, obviously, how much potential projections you will have, initial capital every month. You can select over here daily, weekly, every month, every 2 months, however you want. The price, how much you want to invest, initial deposit. Click on next. and then obviously give it a name, and then it will start doing that automatically on your behalf without any fees. I mean, that's a huge difference. We've seen before 0.75%. What a big difference it is. And the larger the amounts that you invest, the bigger the difference over time. So really, I believe if you're an absolute beginner, maybe for some of them, it might be an interesting feature. But once again, I think you quickly outgrow that. Even if you want to start it, fair enough, but you should really quickly go away from it. I mean, honestly, as much as I love Revolut, but I just don't think it's the smartest way to invest these days. It's very expensive. And once again, you can't move your funds to another broker. Another thing in terms of robo-investor, which I would recommend you much more, try playing around with ChatGPT. They have a free version, they have a paid plan. I'm on the paid plan. I believe it's worth paying for it because you get faster, smarter, and better responses, but even the free plan is good enough. And then ask the same questions. Prompt it to be your Warren Buffett or investment advisor, run you through the process of finding your best investment strategy. And it will ask you questions similar to the ones in Revolut, even better, and it guides you through the process. It will not tell you what to buy, but it will kind of give you an indication. Should you own bonds? Should you own individual stocks, dividend stocks, ETFs, some cash holdings in the interest-bearing account? It will really do a great job, right? And honestly, in many ways, better than what I've seen with Revolut. It's quite rudimentary. It's really geared to beginners. So in my eyes, start maybe with ChatGPT, go through the motions, understand how risk averse you are, if you want to take risk or not, if you want to go all in with the S&P 500 or not, if you want to have some crypto. For example, where's crypto, right? In my eyes, as an investment, you should have some crypto as well in your portfolio to future-proof yourself, especially on the aggressive one. Why there's no crypto? So again, you could do that with other apps, and I really recommend you go through with ChatGPT, understand what you want, and then maybe jump over on Trading 212 and start building up your own pie where you can include as many instruments as you want. You set up your own investment schedule, so it's automated, so you don't have to think about it, and then it will buy every week, every month, however you set it up. And the best thing is there is not going to be any fee on that. And as a bonus, if you wanted to one day, you could actually transfer those portfolio, your shares that you have in Trading 212 to another broker. And best of all, if you sign up to it with my link down in the description below, you'll get a free share valued up to 100 euros. If you still have any questions, Revolut related, pop them down in the comments down below. I'll get back to every single one of you. Next up, check out this video over here. As always, thanks for watching, stay healthy, get wealthy, and I'll see you in the next one. Ciao.